Dilshan, welcome to the podcast.
Michael, thanks for having me. Happy to be here.
Dilshan Dowlah is the head of US at Mercuryo, where he leads the company's growth and product expansion across the American market. With a background spanning investment banking, private equity, and fintech, Dilshan combines strategic insight with operational expertise to scale global payment infrastructure. Before joining Mercuryo, he served as head of payments at MoonPay, where he led global partnerships and payment strategy. He also held leadership roles at Wire, overseeing new market expansion and banking relationships. Earlier in his career, Dilshan worked in investment banking at Piper Sandler, focusing on fintech, mergers and acquisitions, and in private equity at LGT Capital Partners. He holds a bachelor's in business administration and finance with a minor in law from Beirut College. First and foremost, Dilshan, uh, how did you get started in? I guess you started in the typical traditional banking, and then you kind of segued into the world of crypto. Is that about right?
Yeah, absolutely. I grew up very fascinated with technology in general, as a lot of kids are, and I think I've just been lucky to grow up at the time where crypto was all the buzz. Just like the kids these days are probably fascinated with AI, as all of us are as well. And so I'm also from New York City, so
Mhm.
originally from Queens, New York, and so studying finance was kind of a path that a lot of kids from New York pursue. It's the path that opens the most doors and careers. And so when I first went into finance, I was lucky enough to kind of combine those two interests. And so at Piper Sandler, I did M&A for fintech clients, and that
Mm.
led my interest to grow, both in crypto and M&A, but also just in payments and fintech in general. And so, a lot of people don't always stay in M&A and pursue a career directly in finance. And I was one of those folks. I was very much interested in the industry. And when I saw the opportunity to join crypto and payments in general, I thought that was a great way to get my feet wet in the industry. And so,
Yeah.
Wire, which was a very fun, interesting experience as a first into my foray in crypto.
Yeah, on face value, there seems to be no logical argument for saying no to having crypto step into the landscape of transactions. It's cheaper, it's faster, there's less middlemen. I mean, just there is no counter argument for it whatsoever. And I guess I would start with my first question, Dilshan, is explain to me or us what a stablecoin is and why is it so pivotal in this whole process?
Yeah, absolutely. So I think stablecoins, and it's not a controversial take. I think stablecoins are huge, right? A stablecoin is essentially an asset on chain, a digital asset, just like Bitcoin or ETH or everything that we're already very much familiar with, but an asset that maintains its one-to-one ratio with an existing fiat currency. And so it solves the main problem of the existing digital asset space prior to stablecoins, which a lot of people might be scared of or might have steered folks away from the industry, which is volatility. And so, if an asset
Right.
is maintaining a one-to-one ratio with its fiat equivalent, then that asset, and it is itself a digital asset utilizing crypto and blockchain technology, then it's benefiting from all of the facets that crypto technology kind of offers, instant settlement, immutability, permissionless transactions. The list goes on and on. Every single benefit that already exists for cryptocurrencies in the space, but for a one-to-one stable and understandable, without volatility,
Right.
asset.
And legislation was just passed which regulates uh, stable coins. And for the longest time, that was almost like intentionally not done by design to give that sort of instability to the industry. So mass adoption just wasn't there. And then now the SEC is kind of like opening up, and we're seeing almost like a Cambrian explosion for US based companies to kind of step into the ecosystem and actually create a structure that can greatly benefit everyone. Now, again, someone who doesn't understand the industry, a stable coin is just like it's this pegged coin and it's just one to one and great. But why is that so important? Because it creates this, it's kind of like this bridge between traditional banking and crypto. And w- it- I would like to even know like what would be some of the risks that come with stable coins because we've seen stable coins collapse before.
Yeah.
And that was been a big issue. It really shook everyone up. And I guess let's talk about why this is less likely to happen, or is it? And how can we head into a world where we can reap the upsides to decentralized systems and mitigate the downside that comes with something having decentralized? Because we always talk about how decentralized is so much better, right? There's no middlemen. But it's an engineering trade-off, right? The fact that you have a central bank means you have recourse, you could deal with scammers, and you can deal with fraud, and you have methods to reverse things because you have a central authority who can adjudicate these things.
Yeah, yeah. That's an interesting topic to bring up. I could let's start from a perspective of where crypto has been in its history. And recent history being like maybe 5, 6 years into the past, which are, it's a very long time frame in the context of crypto. So I mean, we're coming off of failures like Terra Luna and other and FTX and things of that nature, where folks have a bad taste with crypto, right? And that may not be entirely reflective of where crypto should be or what crypto is today, right? And so if folks are, reluctant to believe in the utility or the safety or the risks, even or understand the risks of crypto today, because of failures in the past, I think, that's up to companies like, Mercuryo and every other fintech platform that operate in the space today to change folks' perceptions. And so, on stablecoins that have failed in the past, those are interesting. I think there's different types of coins in general. And I think a lot of the assets that have failed in the past have not been what we understand today as stable coins. Today
Mm,
there's and this is definitely welcome in this space. A lot more regulation than there was in the past on what could be said is a stable coin. Today, a stable coin is backed 1-to-1 with, USD. At least in the United States, you'd have to
yeah,
buy treasuries. You'd have to prove your reserves. There's a lot of processes in place now with the Genius and Clarity Act that's been passed. And so that's very much, again, welcome in the space. You can't just
mm,
say something is a stable coin without having the proper procedures and policies in place and following the proper
mm,
regulation to kind of allow users to have that confidence that what you're saying is the product that they're looking for, right? And it's a financial product. So this type of regulation, this type of high bar is exactly what users both deserve and need in general. The bar should be always very high. The items that we've seen in the past, the incidents with failures of exchanges or failures of what was considered stable coins in the past, they may not be exactly what we're looking at today, whether it's a algorithmic stablecoin or a bad actor in general as a company and its operations. That being said, you also mentioned bad actors in general in the space of finance and crypto, and that's going to be something that exists in any industry. It's not
right,
just in crypto. That's not something that crypto companies essentially have the task to, I would say, eliminate in the space. That's something that crypto companies and folks that are at the gate, folks that are creating technology and platforms and environments for users to transact in, that's an obligation that these folks have to mitigate, to address, and to have guidelines around. So the good actors, which are by far and large in all industries, and particularly in finance,
right,
greatly outnumber obviously the bad actors. And so there's that obligation is on the platform creators, like companies in fintech and
right,
crypto, to address. And in the same way, like UX is something that they need to address and make easier for folks to increase adoption in the space. But yeah, no,
yeah,
crypto, just like any other industry, has these issues. And because it's finance, because it's regulated, because it's something that's very crucial to people's everyday lives and livelihoods, that's something that these companies will, raise the bar for every single day, like
right.
we do here at Mercuryo.
Right. And there's also an important distinction to make here. When we talk about something being deemed decentralized, that is at the heart of the technology. You can have layers on top of them that are centralized and that do offer you guarantees and that do offer you protection. So there's layers that you build on top of these decentralized structures. So in theory, something can be decentralized, but you can still offset some of that, some of the negativity that comes with decentralization with, protection from centralized entities. Now, I want to talk a little bit more about Mercurio specifically. So you guys are a payment processor, and sorry, I see that. I don't
Jeez.
know. Was that a thumbs up or a thumbs down? I didn't see it.
Yeah,
Yeah, it's that's the sometimes it does that. I don't know why, but um,
yeah.
so for Mercurio, can you break down exactly how it works as a payment processor?
Yeah, yeah, absolutely. So there's There's a lot of infrastructure players in the crypto space, and they all do separate things. What Mercuryo specializes in is the transition from Web 2 to Web 3. We enable folks to onboard into Web 3 using Web 2 embedded finance technologies, right? So, like, what that kind of translates to, if that's high level speak, is we enable folks to purchase cryptocurrencies at the venue at which cryptocurrencies are being utilized. So consider, popular wallets like MetaMask, Trust Wallet, Phantom Ledger, things of that nature. And so you are at the wallet and you want to uh, top up your wallet with cryptocurrencies. You could either bring your own cryptocurrency from perhaps another wallet or an exchange, or you could buy it right there at the gate, and that's what we enable. And we enable that activity through payment methods that folks are already very much comfortable with. So primarily credit cards, but credit and debit cards, but also bank transfers and particular APMs,
Mm.
depending on the geography and country and things of that nature. And following that ethos, we also have a variety of other embedded finance technologies and products that we intertwine with crypto use cases that we offer to our end users as well.
Very, very interesting.
Yeah.
Um, yeah, and with all the regulations in the past year, how has that specifically helped your company?
I think not only our company, just the industry in general, a lot of the regulatory space has evolved. And like I mentioned before, all regulatory updates are helpful to the extent that they provide guidance for a lot of companies to operate in the space and to do the things that we've seen happen in the industry that help progress some of the technology that's in the space. So in the topic of stablecoins, like we discussed before, the Genius Act, Clarity Act, and maybe a few other things that have been discussed and published in U.S. legislation has enabled a lot of companies to have guidelines on how to issue stablecoins, what is a stablecoin, things of that nature. And so Mercuryo being that description I gave of Mercuryo prior is considered an on-ramp, right? For on-ramps in the space, we're considered, in other words, a distribution layer of cryptocurrency. So we're regulated to sell cryptocurrency in the space. And so when regulation like that enables folks like issuers to have guidelines on how to issue stablecoins in the space, that helps enable more folks to again issue that stablecoin and more end users to use that stablecoin, and it helps
Mm.
us as a distribution partner to make sure that folks have access to the stablecoins with their favorite embedded finance products or favorite payment methods, things of that nature.
What do you see the next step for in the industry for Mercurio is? So in terms of just another next layer of adoption.
That challenge is always going to be in the space. I think crypto is something that has such insane use cases across a variety of fields, both for consumers, but also B2B and retail, consumer retail, B2B, institutional, what have you. The list goes on and on, right? And I think for companies like us that face, we're an interesting company that are both B2B, but also B2C, as we have relationships directly with retail customers. And so, we face the issue of UX as much as
Mm.
any other company in the space. And so one of the things that I think Mercurial has to deal with, and any other on ramp have to deal with, and most companies in crypto have to deal with that face with retail, is seeing the technology in the blockchain space and putting that in a package that is easily consumable for the end user, right? And so, for instance, uh, folks working in the industry know and should know a lot about how blockchain technology is utilized, what's happening in the back end, but that's exactly that's to the extent only what it is, right? What's happening in the back end. The end user really doesn't need to know any of those
Right.
things. They just want to perhaps transact or perhaps hold a value or perhaps lend or utilize DeFi or whatever use case they're trying to, partake in crypto. And so, what the responsibility is of folks like OnRamps, Mercurio, and other companies is to make it so that end users could benefit from that product, that use case, without having to go through, managing keys, for instance, or or understanding what's happening in the back end of crypto transactions, or
Right.
concerning themselves with if that asset's on one layer versus another layer and figuring out how to
And
bridge.
that's often one of the reasons why people like, you like we tend to be around people who are technical. So we tend to have the idea that everyone understands layer one, layer two, just who's going to custodian your keys and private keys. But to be honest, people don't want to have to deal with this stuff because the second they hear these words, it's like almost scary and it pushes them away. And just to simplify the process is, usually you mentioned UX. That's what it is. Like it's about taking complex ideas and making them digestible to everyone.
Yeah. Yeah, absolutely. Like we have to thread a fine line here. So for instance, the benefits of cryptocurrencies and blockchain technology, rather, I think it's the more appropriate word is blockchain technology in this case, because cryptocurrency is just one of several use cases that come out of blockchain
Right.
technology. But the benefits of those need to be maintained, right, as we bring that product to market, right? And so, like the instance with managing your own keys, that is the benefit of cryptocurrency, to have your freedom, to have no intermediary between you and access to the funds that you have in your wallet. And so far, knowing the seed phrases to your wallet is the way to, kind of go about that. And that's to some extent been utilized by a lot of folks in crypto, but the folks outside of crypto, Web2 folks, are just the general population
Right.
will see that that's the process and think that that's kind of odd, as opposed to, like, maintaining access to a password, right? And so
Right.
there's companies that come out and
And
then
and almost
make,
like the benefits
yeah,
of having your seed phrases and like
yeah,
is almost like it's almost like a deterrent for them. Like, oh,
exactly,
I don't want to be the one who worries like, oh, if I lose these keys, I lose all my money. That sounds
yeah, yeah,
crazy. I don't want to do that. Like, I don't want, and this is what we want to offset that security to another entity. And this is exactly coming back to my initial conversation where this whole hype, like again, decentralized is amazing, but it's a cost benefit analysis, and not everyone wants to deal with the issues that come with having just a completely decentralized system.
yeah. I think the phrase for this, like, we're diving into a particular topic now, right? And this is a great example for a lot of the benefits of crypto, right? You want the end user, in this case, to have the freedoms and the controllability and the final decision and the lack of an intermediary behind access to their wallet and access to moving their funds. And they don't need to, and you could do that with the seed phrase technology, but you also want to make it so that they perhaps could use that technology from functionality that they're already comfortable with, which, in
Right.
today's age, is like an email and a password, right? And there's companies that do that in the space today,
Right.
right? But I think that's like an example of how UX influences
Correct.
folks'
Yeah.
ability to adopt this technology. So you maintain both the freedoms and the benefits of blockchain technology that's applicable to folks that want to utilize that technology, but perhaps you've made it a bit easier and made it so that they could have done so in a way that they're already familiar and comfortable with and have adopted in just their day-to-day work. And that's
Right.
where on-ramps actually, like, and Mercuryo, come in and say, hey, look, and now we're shifting to another facet of blockchain technology, the purchase of cryptocurrencies, right? Like, if you could purchase it and top up wallets easily with card transactions, things that you're already comfortable with,
Right.
right? The card in your wallet that already exists today, your physical wallet I'm talking about, that's a use case for a company like OnRamps. And that's why we exist today. And that's why we've been hopefully making a lot of progress into onboarding the next wave of folks onto Web3.
Yeah. Now, before I ask where you see Mercurio in 5 years, I first want to ask you where you see the industry progressing. I mean, I guess I would start with your prediction. I know this is a little off topic, but your prediction for the market cap for crypto. I mean,
Market cap.
everyone's calling it digital gold because here's the thing: where Bitcoin's going to go is usually it's going to determine the progress in the industry as a whole. And you know, do you think that Bitcoin is going to become a replacement for physical gold? Do you think this is going to just trickle down into the mainstream? Because it's still, as big as it is, it's still a tiny industry. I mean, it still has a smaller market cap than a single stock, Nvidia. So as much as we think it's too late to enter it for those who are investing, it's actually super, super, super early.
Yeah.
And these things can grow exponentially, and I'm wondering where you see this industry in 5 years from now.
Yeah, yeah. Well, I'm in no place to give financial advice.
Yeah.
I do, but I have been in the industry for a little bit, and I do have opinions on just where the industry is headed in general, right? So, like, to your
Mhm.
question on whether or not Bitcoin will be replacing gold, I don't think Bitcoin or any digital asset is out here to replace anything that isn't in and of itself serving some extent of value that deserves to exist today, right? So gold
Right.
does have that value. People have been, governments have been using gold as a yeah, asset to back their treasuries, and there's good proxy for asset valuations throughout financial markets in general. I think gold has a place in financial markets, just like Bitcoin will and other digital assets will as well, right? So I don't think it's a great analogy, right, to say that Bitcoin perhaps is digital gold. You hear that all the time in the space. Bitcoin has a lot more utility than just digital gold, in my opinion, as well. But it's great. It's one way to look at it. Look at the asset. I think to your point of where Bitcoin is today, yeah, I agree. I think we're just at the beginning, just not only in Bitcoin, I think in crypto in general, right? Like crypto's been in the space. I mean, crypto's been developing for a while, right? But I think it's just now becoming mainstream to say that, oh, we're getting into B2B payments
Why do you
on.
think that is, by the way?
I think we're finally getting into a space where things are a bit more adoptable. So, for instance, stablecoins, like
Yeah.
we mentioned before, it's not a trend. You hear a lot of things in the past where things like kind of blow up and then kind of like wash away. And, like there's examples of that. Perhaps NFTs in terms of digital arts investments in the past could be an example there. But stablecoins for sure aren't things of that nature, like especially in the institutional space and payment space. There's a lot of use cases that are actually being utilized today, and a lot of large companies that are getting into the space, a lot of existing payment networks that are being disrupted by the space today. And it makes sense, right? Because of all the benefits that stablecoins offer. So I think, as more people, more companies, more businesses, and more institutions get into this space, you'll see crypto as as a landscape, as an industry grow tremendously. And folks will continue to benefit from what that offers them.
Yeah. Now, in a broader sense, now, so I guess now from a broader expanding outwards from crypto in terms of just sorry, expanding outwards from Bitcoin specifically into more to the crypto market. Uh, how do you see like what does early adoption look like to you? So, you know, where do you think the more practical use cases for crypto? It might not necessarily have to be Bitcoin; it can be any coin, really. How do you see it really entering mainstream? First.
Yeah, yeah. I mean, I could take that question into a more generic perspective where, like you're asking, and you particularly mentioned crypto, but I mean, blockchain technology is enabling a variety of use
Right.
cases, right? So, like, I mean, blockchain technology could be applied for just, for instance, trading, right? You tokenize something, you could trade it. It's all on chain. It's all instantaneous. It's all public. It's all visible.
Mm,
And so that could it, that could revolutionize anything that involves trading, from what you and I would probably
right.
initially associate with trading, for like commodities markets or like equities or like cryptocurrencies themselves, to things that you didn't believe could be tokenized, but could be, and could also be traded as liquid as cryptocurrencies are. So, for
Mm,
instance, houses, things of that nature, right?
mm,
So I offered with that spiel, I mentioned tokenization and trading technology, which are two, but there's a variety of things that blockchain technology could kind of offer and could kind of influence or even replace in in a product perspective, right? So financial product perspective. So think DeFi and lending or staking or things of that nature as well. And so all of these facets and products that are a result of blockchain technology will, to some extent, and already have been to a large extent in some particular categories, revolutionize their existing spaces that are happening today via intermediaries or via paper or via kind of archaic methods, right? And for some, it'll replace, but for others, it'll work in conjunction with, and it gets complicated. I could dive into an example of like equities. A lot of companies have been tokenizing equities recently, right? But to own a token of equity on on a decentralized exchange perhaps isn't the same as having owned the stock on a brokerage, which gives you the rights to kind of vote and things of that nature that come along
mm.
with that. And so like the trading benefits are there, but what about everything else? So anyway, I just gave that example as a
Right.
one. to show that like trading, it will be successful for what it's designed to do, but the real world works in very many ways that offer
Right.
additional complexities that companies like what we're doing here at Mercuryo and other folks in the space connecting those two worlds need to address and make it so that users do have all of the benefits that they need to have to operate in the space productively.
So where do you see Mercurio specifically in 5 years from now?
That's a good question, man. Just like I can't give financial advice, I like predicting the future in a crypto company is you know um
It's just
it,
something for you to look at in 5 years from now and laugh at.
Yeah, absolutely. Things I've been in the industry for a number of years now, and to have predicted that we'd be here today in the on-ramp
Yeah.
industry would have been crazy to say years ago. But I could give some tidbits from my experience here, given that I'm here at Mercurio. I think payments is changing. It's a landscape that is very, very I don't want to use the word volatile, but I would say adaptive to industry, to new technologies in the space and new trends and new consumer behaviors, right? And particularly with stablecoins, you'll notice that there's a lot of things happening in the space, whether it be every single company issuing their own stablecoin or new layer ones, layer twos popping up, particularly for stablecoins, or new payment companies that are popping up that are kind of blurring the line between a normal payment method and a payment method utilizing stablecoins, things of that nature. And so, depending on where these things go, Mercurio and I imagine a lot of companies in the space will continue to provide that utility and value to folks using that exists in the space to be able to purchase these cryptocurrencies and these assets in a regulated and compliant way to make sure that they could benefit from what it is that they're trying to do utilizing blockchain technologies, right? And so I can't predict where things are going to be. Like, is there going to be one stable coin for each currency in the world? Is there going to be one blockchain that's perfect for all stablecoin transactions and another blockchain that's, perfect for perhaps other use cases in crypto and blockchain technology, like trading or lending or staking, things of that nature? But I will say that the companies that do adapt, like Mercurio has been, to these trends and addressing and keep in mind what the end users are always worried about and prefer and need, like simple UX and easy onboarding and things of that nature, while also being compliant, following the rules that legislators and global governments kind of create. Which are also as adaptable as everything else that I'm mentioning, right? Like new legislation is passed almost every other month, and the companies that adapt to those kind of changing trends will be the ones that are successful in the future. And I believe Mercurio is definitely there.
Very, very interesting. So Dilshan, how can people get in touch with you?
I'm on LinkedIn, Dilshan Dowlah, and I'm also on Telegram at Dilshan Dowlah as well. Anyone could reach out and speak to me in any of those social media platforms.
What a pleasure talking to you, and I appreciate your
Yeah,
time and wisdom.
absolutely, Michael. Super nice. Thanks for having me.